Lee, we got to talk about this week's headlines and what happened and also what didn't happen. What were you expecting and how do you see this playing out in the short term?
Well, 20, 30 years ago, we would have expected to see the VIX over 30, volatility shoot up, maybe 6, 7, 8, 9% by this time, and it's a big nothing burger. I mean, right now, we can't even get 4 to 5% below the all-time highs on the S&P 500, and we're going to war with Iran. So I think that that's the most shocking thing. And there's some reasons why I think that, but it is very interesting coming into Monday and not seeing a bloodbath. And every morning, we open lower, and then we rise into the close, even though we have a lot of downside volume.
So if this drags out, at what point, what levels in the major markets, whether it be crude, the US dollar, S&P, Qs, whatever, at what point do you think, okay, that's my signal that this is going to be a longer term issue for the markets?
Okay, if we have supply issues and we can't get oil out of the Gulf over here, and we start seeing oil above 90, close to 100, then all of a sudden I think that we might have a supply shock. Then we're going to see inflationary pressures. Now, I think those can be relieved with some Fed cuts. I think that, AI productivity, that's deflationary. But if you really want to move the needle, I've got to see the price of oil go up. I've got to see volatility expand, and we've got to see some liquidation in markets, not just people buying growth, people buying value, people buy the Mag 7 or what we call the Mag 7 and the 493. And that's all we've seen this week, just back and forth like a tennis match.
All right, you said the magic word value, it's your bread and butter. So at what point does tech become value? I love your notes, you're saying make tech value again.
Yes.
So how does that happen? When does it happen?
I think it's going to take all year. A lot of people think that you only can get a valuation reset by having a big correction, right? But remember, tech earnings are still there. They're accelerating. I mean, we're almost at a 25 to 30% earnings per share growth on the NASDAQ this year. I mean, who could imagine that? I mean, the S&P has a 16% 12-month earnings growth this year. So in my opinion, if we could just have the NASDAQ be flat until Christmas, then the valuations will be around what they would be back in 2015 when nobody was suggesting that the NASDAQ was overvalued.
Yeah, so you're talking kind of a correction in time. Let's talk about the SaaSpocalypse. It kind of ties into what you were just talking about, but any names in particular you're watching, bellwethers, or just some color commentary you'd like to share here?
Well, first of all, software multiples can go lower, and I think it's dead money right now. From a chart perspective.
For how long?
I think it's going to be another 6 months. And so I want to see a major washout in software, and I want to see companies and the general sentiment not so concerned that Citrini Research put out some sci-fi piece last week and everybody has a reaction. But the bottom line is, when you look at it, we've all dated Adobe here and there, and we,
Yes.
Yes, and it's a train wreck, right? There's nothing wrong with the company, but there is this fear at Adobe that they're not going to be able to adjust to AI and these software companies are going to go away. I think that's completely nonsense, but until we see real proof that these companies are embracing AI and can monetize, they can get people to pay more per month for their existing products. Seats, because here's the thing, if you don't get them to pay more, there's no seat growth now. We're going to have more productivity, but we're not going to have more net hires. In fact, no net hires is the positive outcome. Right now, if you're a CEO, all you have to do to reduce 10% of workforce or more is just say, AI made me cut, right? And every time you cut, then that means less seats to Salesforce, less seats to Microsoft Office, less seats to Adobe, and that's what the problem is. And so the only hope for these software companies to keep their multiple, which I do not think they will, is that they start charging double for the productivity dream that they keep talking about. And I think we're 6 months away.
Interesting. Well, it also brings up the Federal Reserve because the Federal Reserve has been talking about productivity, and that may or may not be an excuse to do certain things. What do you think the Fed does this year, bottom line?
Well, put it this way, they're going to have to start cutting. We're expecting them, up until the Iran situation, to cut slowly, that it's going to take all year to get 2 or 3 cuts. But I think once May happens and we get the new guy in, if we still see oil in the 80s, or we see some supply shocks, I think you're going to see rates go down. I think that growth is going to come into question.
So you don't think they'll be scared by the inflationary aspect of oil 80, 90, maybe even 100?
Well, I think that we'll see. But remember, this isn't Gulf War I back in the 90s. We have energy independence. We are net exporters of oil, not net importers. So ever since 2012, we learned how to drill horizontally. We have what's called the shale revolution. And so we're just in a different place. And you can see it. I mean, why isn't oil at 100 right now? Because we're drill, baby, drill. And so I just think it really takes that shine off the inflation. It's a clamp down on inflation because of how much we're drilling. And also, this current administration is into loosening regulations and having lower prices for energy. And believe me, if you think it's a coincidence that we change regimes in Venezuela to start letting that oil flow up here, and then all of a sudden we're hitting a place that's pumping out millions of barrels in oil, that's not a coincidence. That's a strategy.
All right, I want to get to gold, keep it with commodities here. You mentioned a double top in your notes. It's up multiple hundreds of percent. Well, so is silver over the last 3 years. So how do you see this playing out in some of these shiny commodities?
I think it's a buy on the rumor and sell on the news. I stopped trading gold so many years ago, wish I hadn't. I think all the gold bugs, I'm glad they're having their day in the sun. They finally last summer got gold adjusted for inflation above its high water mark from the early 1980s. So for my dollar, I want cash flow, I want interest payments, I want something underneath that. But gold, to me, this is more a nihilism play. It's a bet on Armageddon, and it's a bet that I don't want to play right now. I'd rather back up the truck later this year on the NASDAQ 100, maybe look at select software. Hey, we might go date Adobe again. You never know what could happen.
We got time for one more, Lee. I'll give you the floor. What's on your mind here?
I think that investors are underestimating how long this war is going to be and how deep it could get. And I think that now is not the time to think that you're going to buy some good deals. I think you want to wait for a widespread liquidation. I think you want to see volatility above 30. And out that, I still think we're going to have a great year for value. But by Christmas, bring me back and ask me, did you trim your value positions to go buy tech? Because I bet you I'll say yes.
I'm going to ask you if you trimmed your 30-year bonds. All right, we got to go, but thank you, Lee.